Well, good morning. My name is Delaney, and as Jim said, I'm a senior tax manager and CPA with Glenn Burdette. We are a local accounting firm with offices here in SLO, Paso, and Santa Maria. And as Jim said, I was asked to come and give a brief tax update today, things to consider and be thinking about as we move into tax filing season these coming months. So every year around this time, end of January, I always get real excited when I think about the 12, 13, 14-hour workdays that lie ahead of me over these next 2.5 months for tax season. My family is also pumped. And one of my goals today is to infuse in all of you some of the excitement that I'm feeling right now about taxes. I'm sure you're noticing your mailbox is starting to fill up with little odd-shaped 6x10 size envelopes containing 1099s, W-2s, etc., with perforated sides that are really near impossible to open without partially ripping the tax form. Apparently, this is the most secure way to send mail these days. A potential mail thief sees the little perforated sides and just decides to move right on. So one of the big changes in 2021 is the increase in child tax credit from $2,000 to $3,000 per child under 18 and up to $3,600 for children under the age of 6. So when my wife came to me last February in tears with the news that we were pregnant with our third child, she was mourning that our youngest two would only be 17 months apart, while my first words to her were literally, "Hey, we're going to get the $3,600 tax credit." Now tell me you're a CPA without telling me you're a CPA. I want to tell you about 2 new tax letters that may be coming to a mailbox near you here soon. The first is Form 6419, because the IRS doesn't want to spend any time giving the letter an actual proper name. This letter reports the amount of advanced child tax credit payments you received in 2021. The payments themselves started going out last July in monthly deposits, normally a few $100s per child. This letter tells you how much of the payments you received. And if you're married, both you and your spouse will actually receive separate letters with half of the advance payments each. Some bad news here. It appears the amounts per the letter may actually be incorrect. So I'd encourage you to go home, look at your July through December 2021 bank statements, add up all of the advance deposits. They're labeled IRS, Treasury, Child, CTC, and write that number at the top of the letter with the words, "This is what I actually received." Another letter that is going out is the 6475 letter. I know these IRS letter numbers are going to be really easy for you to remember. This one relates to the third stimulus check payments. It seems like forever ago now, but these were $1,400 payments for each member of your family, if you qualified, that were paid out around March 2021. Again, I'd recommend to look at your March bank statement, maybe April 2. It'll show up as IRS Treasury EIP3. So jot down that number and put it away in your tax file. Speaking of tax files, one tip I want to share, instead of taking a picture with your phone to create kind of a blurry, messy JPEG that we kind of can't read, if you're using an iPhone, open up your Notes app, click the camera icon, select Scan Documents. This then converts the picture you take into a PDF that you can email over to your tax preparer. It's a beautiful thing. Okay, employee meals at a restaurant are 100% deductible in 2021 and 2022. So go support your fantastic local restaurants here in the Central Coast. Keep in mind, California only allows a 50% deduction. Employee retention credits. We are doing a lot of these credit calculations for our small business clients. 2 ways to qualify. Either you had a significant drop in gross receipts or you were fully or partially shut down by governmental order. An example would be a restaurant not allowed to offer dine-in service to customers. This credit can be claimed on wages for most of 2020 all the way through Q3 2021. So definitely worth a look in to see whether your business qualifies or not. And probably the hottest topic right now for us is California's pass-through entity elective tax payment. It's kind of a mouthful. This is also known as the SALT workaround. So right now you're limited to only deducting $10,000 state and local property taxes on your personal return as an itemized deduction. But if you're a small business owner of a pass-through entity, LLC, partnership, S corporation, this workaround allows you to pay California tax at the entity level, and then you receive a federal tax deduction on your K-1, as well as a credit on your California tax return, effectively sidestepping the $10,000 SALT cap. There are definitely some nuances and potential limitations to consider. I do want to mention that Governor Newsom just introduced some favorable provisions about this credit in his budget that would make this workaround even more appealing. So if you have a pass-through business, I'd encourage you to look into this before March 15th. And finally, it appears the House passed Build Back Better bill, which contains some significant tax provisions, is dead on arrival in the Senate. So for now, we'll have to wait and see what, if anything, comes of it. If you have any questions about these topics and want to find out more, feel free to reach out to us or visit us on the web, glennburdette.com. And thank you so much for listening and for your time.